It's a new month here at Henssler Financial, and we found three important things to focus on in the market this month. Number one, fourth quarter earnings. Next week kicks off earnings season with over 75% of companies in the S&P 500 reporting by February 10th. Earnings growth is expected to be flat year over year in the quarter, while sales are expected to climb 8%, indicating further margin contraction. With earnings revision sentiment at the levels last seen in the 2008 and the 2020 recessions, investors will be watching management guidance closely for 2023. The year end is typically when companies give some insight into expectations for next year. Wall Street still expects 5% growth in earnings in 2023, but the trend is negative, and the downside in a recession scenario could be more than 15%. By the end of January, we should have a much better feel for how CEOs are thinking about 2023. Number two, leading economic index. The recent Conference Board report in December saw the leading economic index, otherwise known as the LEI, continue its plunge that began in early 2022. The year-over-year change is now down almost 5%. The LEI is comprised of credit, consumer, manufacturing, jobs, and housing conditions with a forward-looking bias. The trajectory of this measure continues to signal a recession, and the report states that the Conference Board projects a recession is likely to start around the beginning of 2023 and last through mid-year. We will be watching the pace of declines in the LEI in coming months to confirm the likelihood of recession and also its potential depth. A milder scenario would see the LEI rebound early this year. Number three, foreign markets. After a year in which the vast majority of foreign equity indices outperformed the S&P 500, we're turning our eyes a bit towards the world markets and economies. China is in the midst of reopening their economy following over 2 years of COVID lockdowns, and in spite of dollar strength, Latin America continues to benefit from a more bipolar geopolitical alignment of Eastern and Western hemispheres. Additionally, while Europe is seeing economic weakening similar to the US, easing of energy prices should have an outsized benefit, and any resolution with Ukraine could see a more rapid recovery. However, most importantly, the rest of the world has far cheaper valuations. The last time we saw such a steep discount in foreign equity was at the height of the dot-com bubble. And that's been your Market Minute for the month of January. Thanks for listening.